Hello, everyone. Welcome to another episode of In Conversation by Advisorkhoj. Today in conversation, our guest is Mr. Rohit Seksaria, Fund Manager Equity with Sundaram Mutual Fund. Welcome, Rohit, to In Conversation by Advisorkhoj today.
Thanks, Rain.
Our pleasure. So, Rohit, just to begin with, of course, we have seen a bit of cheer in the market for the last 2 days. There's for some respite, including today as well. But before we jump in, would love to know in terms of your investment management journey, your experience so far.
Sure. So I have been in markets for more than 2 decades now, and with Sundaram Mutual Fund for the last 8 years. Prior to this, for almost a decade, I was with different long short funds in Singapore and Hong Kong.
Right.
There, I have tried my hands at different strategies, different markets. So I have looked at India long short, I have looked at India plus ASEAN, and Asia Pac long short. And I started my career on the sell side research in the research offshoring arm of CRISIL. So CRISIL Irevna Research, we were a group of people who started that outfit. And
Right.
then that was acquired by CRISIL.
Right. Wonderful. So at Sundaram, you are managing the Sundaram Services Fund. Apart from Sundaram Services Fund, which all funds are you managing at Sundaram?
The key funds I manage are our Sundaram Services Fund, Sundaram Small Cap Fund, Sundaram Multi-Asset Allocation Fund, and Sundaram Financial Services Fund.
Right. So particularly today, as we are talking about the Sundaram Services Fund, which has successfully completed over 6 years of track record, right? And of course, given a wonderful performance. So could you tell our viewers in terms of, is it a fund covering the broader markets? What is the strategy behind this fund? And why services fund is increasingly becoming very important for being in a client's portfolio as we speak?
Sure. So let me start by giving you genesis of this fund. See, India is a services economy. Almost 55% of our GDP comes from services.
Right.
And not only that, in terms of the growth, if you see, a big part of our GDP growth comes from services. So when we say the India GDP growth rate is 6 to 7%, services are generally always who are doing the heavy lifting. Services growth in general tends to be 7 to 8%. So the idea was very simple. This is a large part of the economy, which is growing faster than the overall economy. Why not participate in that part of the economy, which is a large part and which is also growing faster? Because in the long term, higher returns are linked to the faster growth. If the underlying growth is faster, the returns for the investor should be higher.
Right.
That was the idea. And that's what we have proven for last 6.5 years. There are various advantages actually for services. One, when we talk of services, what people think is IT services, which is more export-led.
That's right.
But here, what we are talking of when we talk of services is a domestic services-oriented kind of a fund. IT services is there, but that's a small part of the fund. The biggest basket in our services fund is financial services, which is roughly around 40% of the fund. Within financial services, it's both lending and non-lending financials. And together, they combine around 40% of the fund.
Right.
The other big pillar is telecom services, which will be roughly around 15% of the fund. IT services, where we have both domestic IT services, your likes of your Zomato, Swiggy, all those kind of companies, or Apple, which are more domestic oriented or e-com services. Combining that with your export oriented services, that becomes the third big pillar. And the fourth big pillar is your retail, hospitality, those kind of companies.
Right.
Besides this, we also have hospitals, diagnostics, media, logistics, staffing. So if you combine it all, it becomes a very, very well diversified fund. It's not a narrow sector-based thematic where you are tied to the swings of that particular sector. It's a very, very well diversified thematic, which we have seen does well over a long period of time. Also, one good advantage of services is not only high growth. High growth, we have seen underlying GDP growth rate is higher, so services companies growth rate is higher.
Right.
That we have proven also there is something called a Nifty Services Index. If you see the services index growth rate for last decade and a half has been higher than the Nifty growth rate. And the best part is the margins of services are very steady.
Mm.
Services, because it doesn't touch commodities, its margins tends to be much more steady. So
Right.
high growth together with steady margins, which is a perfectly best compounding product for a long-term wealth creation. And that's what we have tried when we brought this product in the market 6.5 years back. Now, if you see the 6.5 year history, proves that whatever thesis on which we brought this product has been proven right.
Right.
So internally, like though it comes under thematic product, internally we compare it to the FlexiCap basket, where this product ranks among the top quartile in the FlexiCap basket.
Sure. Sure. And so how many stocks probably this fund holds usually?
We have roughly 45 to 50 stocks in this fund.
And the universe would be of how many?
The universe here would be actually the total universe would be around your 150 to 200 stocks.
Okay. Okay. So it's broadly covering the broad markets.
It covers a very broad market. See, what all it doesn't cover. The big one it doesn't cover is in terms of your industrial goods, industrial and
That's right.
capital goods,
Hmm.
FMCG, your pharma, auto. These are the kind of companies it doesn't cover.
So it definitely includes some of the small caps as well.
Yeah. So in terms of the cap curve, the way we had positioned this product is 40 to 60% large cap, balance mid and small cap. So as of today, if you ask me, we are roughly around 55% large cap and almost 40% mid and small cap.
Sure. So pretty much a market agnostic, a sector agnostic fund.
Yes.
Wonderful. Wonderful. And what kind of earning growth differential? Of course, each service sector will have a different one. But what kind of earning growth differential would you probably say vis-a-vis, let's say, a manufacturing sort of fund? Because services is an essential, if I can use this word, a commodity, right? It is non-elastic in many ways, if we speak, right? So what kind of earnings growth do you see on an overall basis?
See, longer term, if you see services, generally, what we have seen grows 2 to 3 percentage points higher than the broader markets.
Right.
So the services funds growth rates are 2 to 3 percentage points higher than the broader markets.
And what future do you see of the services sector, particularly if I will talk about this fund? And why do you believe this fund is an important fund to be in clients' asset allocation?
See, services is a secular long-term growth story.
Right.
India, all said and done, is a services economy, and services will continue to do well. So if you see, even in our GDP, if you take any 10-year period, 8 years, services is the one which will be doing the heavy lifting in terms of growth. Only 2 years out of 10 is when industrial and capital goods, that part of the economy does better.
Sure.
So services is one area which gives you a good high secular growth rate for a very, very long period of time. See, we are right now 55% of GDP services. If you see developed economies, almost 70% of their GDP comes from services. So we have a long journey of growth ahead.
Right.
And this fund seems best suited to participate in that growth journey, long-term growth journey.
So typically an investor should be suggested to be there at least a 5-year plus sort of time horizon in this fund.
Yeah. Actually, what I say is, an young investor looking to invest his retirement money also can do an SIP in something like a services fund.
Right.
It's not your typical thematic fund where an investor needs to know when to get in, when to get out. This is much more of a secular long-term product where investor can come with a very long-term period in mind, and he will have a good, steady journey.
Sure. Very interesting concept. So, Rohit, like I said at the beginning, we are having this conversation at a very interesting time where, of course, the market has cheered in the past 2 days. Uh, but overall, if we see from the peak of the markets, the we've seen the large caps corrected almost about 15, 16%, mid cap about 25, and small cap around 26% upwards there, here and there, not taking into account the last 2 days recovery, which you've seen. And of course, there's a lot of noise around, the tariff trade war, as we say. So very crisply, if you could, share your views on the equity markets in our current scenario, and what could be your near-term views. When I say near-term, obviously we're sitting in March. I'm looking at, let's say, what are your thoughts around the equity markets in about a year's time period from now?
See, domestically, what I see is some of the challenges which we're seeing 6 months back being behind us.
Right.
Valuations in the markets are turning much more reasonable. Government, or rather RBI, seems focused on reviving growth. The liquidity environment is easing. They have started cutting rates. Even in terms of some policy decisions, they have tried to ease things out. Focus from the RBI seems very clear to be on the growth side.
Right.
That should start helping our companies reporting better growth numbers. Let's say it takes 6 months to start trickling in. So another 6 months, it should start flowing through the economy.
Sure.
Also, you see crude prices have corrected very sharply.
Very sharply.
And that will provide positive triggers to most of the manufacturing companies. It will help their margins. That will also take, let's say, another 6 months for it to come in the numbers.
Right.
And thirdly, last year's slowdown was led by slowdown in government spending.
Right.
Now, since December, we have seen a sharp pickup in government spending. This was the first time in last 8 years when government didn't spend their full budget. I don't think that's something which is going to be the norm. This year was more of an exception. Going forward, we will see government spending the budget as they have been doing, and that will also provide enough support to the economy.
Right. Absolutely correct.
In this backdrop, I feel that domestic side, what the big headwinds which we were seeing last year are behind us.
Right.
Domestic side, things are improving and valuations have turned more reasonable. So markets are looking good. The key challenge which I see today is coming from the tariff narrative. From the Trump's tariff narrative, right now, it's very difficult to figure out what will come finally, what will be its impact, and basically, what are the second order, third order derivatives of that. That's something I believe which will keep markets on tenterhooks. So that's something, let's say, hopefully we should have a better sense in a couple of months. From domestically, I think things have improved quite sharply.
Right. Absolutely right. So because all this could probably impact the US GDP by almost 1% on the downside. And of course, that is something which will, have a almost like a $2 trillion, impact globally. And of course, I think you're absolutely right, because how the Trump tariff war plays out and how this dust settles and how the world actually settles to the new normal is something which will probably settle down. So how quickly do you see these FIIs coming back? Do you foresee them soon enough?
See, FIIs come to India for growth.
Right.
Right. So as soon as there were signs of growth slowdown, we started seeing FII exodus. So I believe when we see growth coming back, FIIs will come back. Because if you think of slightly longer term, India is the market which is still giving them a secular 6 to 7% kind of a growth rate.
Right.
Very few global economies are able to do that.
Yeah. Just one question, Rohit, is that, with all this tariff war going on, and of course, we have seen, that the US markets are correcting and the dollar index has also fell very sharply to the other basket of currencies. Obviously, a Fed will not be in a hurry to reduce their interest rates because of the impact of the inflation. And hence the dollar carry trade, of course, continue to be expensive. But obviously, the money which flopped back, let's say, into the US market, if at all it's gone back to the US market, Do you think they will sooner enough realize and start chasing more growth to their capital, and we could probably see a more sooner comeback of FIIs, understanding this overall picture which is shaping up? Of course, I'm not discussing the China story, which is coming up as well on the other side, but I'm looking at more because structurally, India still looks very, very good from a long-term perspective.
Yeah. And I believe some of the money which went out was purely tactical.
Right.
It was just to take advantage of Trump trade, the narrative of tax cuts. So all those monies can come back very fast.
Right. Sooner. Wonderful. So, Rohit, thank you very much for the market inputs. So today, through this in conversation, what message would you like to give to distributors, advisors, investors, particularly about your Sundaram Services Fund? And let me use this word for the sake of it, some strict procedures which you would suggest the investors to follow in current market situations in their long-term wealth creation.
Right. See, in terms of Sundaram Services Fund, I would like distributors to look at it like any other well-diversified basket which they invest in for a very long term. This is one fund which has right thematic and a proven track record, and this can continue to deliver top-notch returns over the next decade. In terms of investors, only thing I would like to say is don't get too much bothered by the volatility. As the industry keeps suggesting SIP is the best way to come in, these volatile times are the right times for SIPs to continue. And SIPs, if investors continue the SIP, they can see a very good wealth creation journey over the longer term.
Great. So, well, for our viewers, this is Mr. Rohit Seksaria, Fund Manager Equity with Sundaram Mutual Fund, talking about Sundaram Services Fund as to why services is a very important thematic, though a broad market category to be there in clients' portfolio, and also talking about the current market situation. So thank you, Rohit, for taking our time and joining us today in conversation with Advisorkhoj. Thank you very much for your time.
Thank you.
Thank you.